is the real big one. There's been a lot of different changes, and I'll talk about some of the other ones that are on the next couple slides here. But this one is a huge one in the sense of all of the taxes that you're paying as an individual are capped at $10,000 per year as far as the deduction goes. And so to kind of put this in English, with the state and local income taxes and your property taxes as well, once that goes over $10,000, that's it. You get $10,000. And so, if you're in a situation where, let's say that you're paying $10,000 or $15,000 to the state of California every year for income tax, and you're also paying $10,000 or $15,000 on your property taxes. So you could very easily have a $20,000 or $30,000 tax bill every year that you're paying to the state, in this example to California, but that $30,000 that you're paying, you're only getting the benefit of 10, and the other 20 is lost. And so what we have to be looking at then is, if we're not going to be able to get all this stuff on the personal side, are we going to be able to get it some other way? And that's where I've got this highlighted here, the home office deduction and the rental real estate. This rule does not apply. And so remember, always be thinking about the difference between a personal expense, a personal type of tax deduction, and a business expense, a business tax deduction. They're treated two different ways. And so even though here, let's say that you're paying $2,000 a year on some real estate for some taxes, those may be totally capped if that is in your name and it's an investment property. But as soon as we put that into the rental market and make it a rental property now, that becomes fully tax deductible. And so don't think about this cap as any way limiting your ability to deduct rental property deductions, including property taxes on real estate. Okay, so if I had 100 rental properties and each of them were paying $2,000 a year, so I've got $200,000 of property tax every year, that would be fully tax deductible. So this $10,000 cap doesn't apply. Okay, so next slide. That's going to show us that a lot of other expenses have been eliminated. And so anytime that you see something that's been eliminated in taxes, you go to your return preparer tomorrow and he or she says, nope, can't do that anymore, that's been eliminated, or can't deduct that, it's just not going to work anymore. Don't take that as the definitive answer. And I'm not saying that the CPA or attorney or tax professional, they would be wrong, but you should always challenge them. How come I can't deduct it? Is there a loophole? If you go and you ask your return preparer, can I deduct moving expenses? The answer is going to be no. That little asterisk next to it, all that means is that if there was the military moving you as part of your duty, your tour of duty, at that point, then you can deduct it. But pretty much anybody else that's not in the military, we can't deduct it. But what if you were moving your office, your business location? Could that be deducted? Yes. Okay. Investment expenses, no longer deductible. But what if I'm not an investor and I'm a trader? If I'm a stock market trader, all of those investment expenses now become business expenses and become tax deductible. So again, if you go and you ask your tax professional, can I deduct the cost of going to an investment seminar? The answer is going to be no, you can't. And that would be the correct answer. But if you're in the business of trading stocks, then that's not an investment seminar, it's a business seminar. Same thing with the next one, union dues, professional dues. I pay professional dues to retain my law license every year. Are those tax deductible? Well, no, not for me as a person, but on my business return, on my law firm return, yes, they are. Same thing, employee business expenses, tools, uniforms, job expenses. If you came to me and said, are my tools going to be tax deductible? My answer is going to be, it depends, right? Like everything else in taxes. But don't take this that you can't deduct tools. You as a person can't deduct tools. as an employee, right? That's been taken away from us. But as a business, you certainly can do it. Okay, let's move on to the next one. And here's just a few more of these types of things. The casualty theft losses, um, little asterisk there. All that means is that if you're in a federally declared disaster area, then some of these casualty losses can become deductible. But the business has a theft loss that is tax deductible. The same thing with the bottom one, the work related education. Not going to be deductible for people, but for a business, it is. And so when I need to take continuing legal education classes, I could not deduct that on my personal tax return, but could deduct that on my business return. Okay, so let's move on down if we could. Um, but again, and the other two there, the safe deposit box and the job search expenses, those were eliminated. Probably not going to get those as well on the business returns. But I guess if you had a safe deposit box,